If you had 1,000 ringgit to invest every single month as a Malaysian, where would you put it? There are just so many options out there, right? ASB, EPF, money market funds, robo-advisors, stocks, gold, crypto. But all these choices, I feel like it makes a lot of people feel intimidated. They don't want to make the right or the wrong choices, so they end up not doing anything. So in today's video, I will be sharing how I would invest 1,000 ringgit per month. I'll be sharing actual numbers and actual platforms that I would use. And even if you have less than 1,000 ringgit a month or more than 1,000 ringgit a month to invest, you can still use the same general principles, right? Just tweak it based on your needs. And speaking of that, of course, this is not something that you should follow blindly. This is just how I would do it based on my current situation and my investing goals. So you guys need to tweak it based off that. Anyway, let's get to it. So before I jump into the split and into any specific platforms, let me just share how I would split my investments basically from a general sense. So I would have 3 buckets. Number 1 is my safe and stable bucket, right? These are for, consistent returns, not too much volatility, and I know what exactly to expect. And then my second bucket is for my long-term growth. So this would be where the majority of my funds goes towards to, and this is for long-term investing, building for the future, maybe even retirement. And then my final bucket is bucket number 3, and these are for alternative assets, things that are not so correlated and things that I'm taking maybe a bit of a moonshot bet. So, a lot of people, they think about investing a bit too complex, but people who really build wealth, they keep it simple, it's boring. So first things first, let's talk about bucket 1. I would put 200 ringgit per month here out of my 1,000 ringgit, so that's about 20%. For those of you guys who don't have your emergency fund set up yet, which is around 3 to 6 months worth of your expenses, then the entire 200 ringgit should just go there. Where you want to put it is completely up to you. You can put it into a high yield savings account, accounts like GX Bank, right, Aeon Bank, completely up to you. Or you could put it into money market funds like Stashaway Simple, Versa Cash, and so on. So personally, my choice would be a mixture between digital banks and money market funds. I'll put maybe 50-50. Digital banks for the pure liquidity, while also giving me some decent returns. But at least, I can access the cash anytime I want. Whereas money market funds will give us slightly higher returns, but it does take some time to withdraw money when we need it. So yeah, we want our money to be sitting there idly. We want it to be low risk. We want it to be low volatility, which is exactly what all these platforms provide. But at the same time, we also don't want it to just sit there earning us nothing. At least this is giving us, 3, 3.5, maybe even 4%. So once your emergency fund is full, you have 3 months or 6 months or 1 year, whatever it is that you decided, then this 200 ringgit can be moved to bucket 2. Or you could do what I did, which is to add on more of a safety net beyond the standard emergency funds. So what I did was, back then, I was having the consideration of quitting my corporate job and, trying to pursue my own business. And there's no way that I could have done that if I only had 3 months worth of my expenses saved up, right? That's too short of a time frame. So I started adding more into this sort of safety bucket, and I put it into ASB just because it gives even higher returns. So I would split this separate from my emergency funds, because to me, this additional safety savings that I have, I know that I can spend it whenever I want, right? So for example, let's say when I quit my job, if things weren't going well at the start, I can draw down from this money. Whereas my emergency fund, I wouldn't touch it except for real emergencies. So yeah, I would split it up. Like I said, emergency fund, I would do money market funds and digital banks. And then this extra savings, I will put it into ASB. So yeah, basically, if you have your emergency fund set up, you can either add on extra safety savings, I'll put that into ASB, or you could move the rest into bucket 2, which is for our long-term growth. I know this part is boring, right? A lot of people look at 3%, 4%, even 6% returns given by ASB, and they think this is way too slow. They want higher returns. They want to double their money with crypto or whatever it is. But I do think that this bucket is extremely important. It gives us that safety net to fall back to in case our other investments don't work out. You don't want to be that guy who goes all into one investment, and then let's say you have a medical bill or your car breaks down, and then you have to sell your investments at a loss. We don't want to be in that position. So now we talk about bucket 2, which is long-term growth. And here I will be allocating 600 ringgit per month, or 60% of my total monthly investments. Like I said, this to me is the core bucket. It's for long-term investment growth, and this is where I start to see my money really compound over time. So the first part of this bucket 2 is for global investing, and I will put 400 ringgit per month here. So we already have a lot of exposure to Malaysia, right? Our jobs are here, we earn in ringgit, we have EPF savings. So a lot of things are already based in Malaysia, which is why we want to diversify a bit with our investment. There are two options I think are good for us to invest globally. And the first option is for people who don't really know how to invest and they don't want to bother learning. All they know is, I want to invest my money globally, help me figure it out. So if this is you, then I would go for the robo-advisor option, so a platform like Stashaway, and I would just choose, general investing, where you can answer a few questions and decide the risk level that you want to take. Personally, if this was me, I would go for the 36% risk option, which is also the highest that you can choose in Stashaway, just because I'm the type of guy who, doesn't mind taking on more risk for potentially higher rewards. Just generally speaking, in the personal finance world, the younger you are, the more risk you want to take, just because we have a lot more time for things to recover in case our investments go south. So for someone like me, as I get older, as I get closer to retirement, then yes, I will consider moving my investments towards things that are a bit safe. So in 2025, this specific portfolio, this 36% risk one, returned 12% in Malaysian ringgit terms and 23% in US dollar terms. So I would say it's actually pretty good. I like this as an option to invest globally because it's extremely simple, it's extremely convenient, especially for people who, like I said, don't know much about investing. It can give you exposure to so many different assets, not just US stocks, but also global stocks, gold, bonds, crypto even. It's just very, very convenient. So some people might be wondering, why go for a Stashaway portfolio with so many different ETFs when I could just buy something like the S&P 500? Well, you could. The S&P 500 and the US stock market has performed the best over the last, I would say, maybe 15 years. But we do want diversification. Investing just via Stashaway will give us exposure to not just the US, but many other countries as well. And I do think that even though, yes, the US has been a leader, we still want to spread our eggs over multiple baskets. So the other route is for those of you guys who prefer to be more hands-on, prefer to choose your investments, you don't trust a robo-advisor to do it for you, you can just always open a brokerage account and then buy the ETFs that you want. So for me personally, I am buying VT, which is the total world stock ETF, something like that, which basically invests in stocks from all over the world. So yeah, you can also do this. You can pick whatever ETF you want based on your own opinion or analysis on what is going to perform well. So even though I would consider myself to be someone who is a bit more hands-on with my approach, of course I understand investing, I understand and I follow global markets, I still use a mixture of both. I still use both robo-advisors like Stashaway, and I of course have my own brokerage accounts like Moomoo as well. One thing to note when we invest globally is that we do have a currency exposure. So for example, last year, I guess you guys know as well, the Malaysian ringgit strengthened against the USD by a lot. Right now, I think we're about $1 to 3.9. And when this happens, our USD denominated investments will take a hit. And that is why the Stashaway performance, it returned 23% in US dollar terms, which sounds really good. When we convert it back to Malaysian ringgit, it's only 12% because the ringgit has strengthened. So yes, this is a risk when we invest globally, but to me, it is a risk worth taking. Like I said, we want to diversify our investments and our currency. And anyway, if we continuously invest every single month, sometimes we will buy the currency at a good exchange rate, sometimes at a bad exchange rate. Over the long run, I would say that we would be okay. Now, the second part of my bucket 2, my long-term growth investments, would go towards the local market. And yeah, I know a lot of people are a bit surprised. Some people think, why invest locally? Malaysia has no hope. But hear me out. So 200 ringgit per month will go here. And if you are Bumiputra, you can consider ASB again, right? Last year, for financial year 2025, ASB returned 5.75%, which is actually really, really good. I think most people will consider the average performance of the S&P 500 to be around 6 to 7%. You can't compare the last 10 years because it has been really exceptional growth. But yeah, I think over the long run, we will expect 6 to 7%. So ASB giving us something similar to that at a much lower risk level is actually almost a no-brainer option. And it's also considered investing locally, technically, because a lot of ASB's investments are actually in Malaysia. It is denominated in Malaysian ringgit as well. But personally, I would not do this because this bucket, to me at least, is for my high growth or my long-term investing portfolio, right? And I want to take on a bit more risk for potentially higher returns. I know I literally just said 6% per year is actually pretty good, but I don't mind taking on a bit more risk to try and outperform that. So my strategy when it comes to investing into our local market so far has been a dividend approach. So I always look for blue chip names that gives a dividend of, let's say, over 4%, and they're constantly growing their dividends. So the most common names for this are always the banks, REITs, energy companies, I guess those are the main ones. But I do want to start exploring more of the growth names, so names that maybe don't pay a dividend or don't pay a very high dividend, but they have the potential for, capital appreciation. Those to be honest, I haven't done a lot of research on, so I don't feel comfortable putting a lot of money in it, but it is something that I want to do in the future. So let me know if you guys are interested in this. Maybe I might do a video on it down the line. So to invest in Malaysian stocks, there are of course a lot of brokerage options out there. Unfortunately, I don't think any robo-advisor gives us access to the Malaysian market, but you can always just, again, use a Moomoo account. They don't only give us access to the US market, but also the Malaysian market. So yeah, if you guys want to invest into stocks, then Moomoo is a really good option. If you guys want to sign up, you can use my link. I'll leave it in the description of this video, and you get some nice freebies when you sign up and make a deposit. I'll be honest with you guys though, the FBM KLCI has not been a really good performer over the last 10 years. If I'm not mistaken, over the last 10 years, the performance has been around negative 0.7% per year, which basically means you haven't made any money. So yeah, why would we invest here, right? Well, for one, I think things are starting to look good. It's starting to look like we are going to make a turn, and hopefully our stock market will reflect that as well. But another thing is, Malaysia is home to us, right? I'm familiar with the companies here, I'm familiar with the stocks, and it is also nice to have some investments denominated in Malaysian ringgit. Still, I don't want to have too much of a home bias to the extent where it negatively impacts the overall performance of my portfolio, and that is why I'm only putting 200 ringgit per month here compared to 400 ringgit per month in my global portfolio, right? It's completely up to you guys. You can tweak it based on what you feel more comfortable with. Also, since 200 ringgit per month can't even buy us one lot of Maybank, because the way the Malaysian stock market works is one lot is equals to 100 shares, we would need about, I think, 1,100 ringgit to buy one lot of Maybank. So what I would do is, I would keep this money into a money market fund. So something like Moomoo's Cash Plus is perfect for this. And once I've accumulated enough money, then I will go ahead and buy one lot. And then finally, we have bucket 3, and these are for my alternative investments, and I will allocate the remaining 200 ringgit per month, or 20% of my investing budget. So this is the part where most people either completely ignore or they go all in way too heavy as a percentage of the portfolio. It seems like there's no in between, right? It seems like there's not many people who are like, oh yeah, I'll just invest a bit here. Everyone's either I invest 0 or I invest my entire net worth. But I'm trying to say here that it does make sense to allocate a small percentage here. So in this case, 20%. The goal of these investments is to have something that diversifies away from stock markets in general, because a lot of the things that I've invested in previously, global stocks, foreign stocks, even ASB to an extent, it relies heavily on the stock market. And in general, there could be differences, but the US stock market, if it goes down, typically speaking, the Malaysian stock market will go down as well. So the first part of my alternative investment bucket would of course be gold, and I will allocate 100 ringgit per month here. So I'm sure all of you guys already know this by now. 2025 was the year for gold. It went up a crazy amount. I feel like almost every day I read the headline, it says gold made a new all-time high. And apparently it made 53 all-time highs in 2025 alone. That is crazy. In Malaysia right now, 1 gram of, I think, 916 gold is going for about 640 ringgit. Now, does that mean it's too late to buy gold? Honestly, I have no idea, but it doesn't necessarily mean that just because gold went up so much in 2025, it cannot go up further over the long run. I mean, if you look at, for example, JP Morgan, they're forecasting that gold could push even further towards $5,000 per ounce by late 2026. And then we look at central banks all around the world, central banks from China especially, they're buying so much gold, and it seems like they don't really care what the prices are. And with all the geopolitical uncertainty, tensions, trade wars and all that, it feels like gold will still have a role to play in our investment portfolios moving forward. But of course, past performance doesn't guarantee future results. If there's one thing that I can say with 100% uncertainty, okay, maybe not 100%, but 99% uncertainty is that gold will not return 60% per year every single year moving forward. 2025 was just an anomaly. Honestly, even I have a hard time buying gold at these prices. It never feels good to buy something at such an expensive price when just 1 year ago, it was trading at a 50% discount. But what I have been doing is that I've been maintaining my gold DCA, which I started about 1.5 years ago, I think. And I will continue buying regardless, because all of this is set up automatically. I'm trying to be as emotionless as possible when it comes to investing. Sometimes I can't control myself. I feel like I have to sell, and I did sell a portion of my gold investments, but what I wouldn't change is that I will continue buying, I will continue having my DCA set up so that every single month I am buying at least a bit of gold. So if you guys want to buy gold in Malaysia, there are a few options. You can go, the direct route. things like Maybank's Miga I, you can buy Bursa Gold Dina, they have an app as well. I think these platforms are pretty good. They are of course regulated by Securities Commission. You can buy Malaysian ringgit, the minimum investments are actually pretty low. But the route that I would go for is that I would actually invest into a gold ETF like GLD. I know some people do mind doing this, but personally I don't mind that the gold that I'm buying is via an ETF. I know it's not like ownership of real gold bars, and it's not like I can go and redeem gold if I wanted to, but to me it's just a lot more convenient when it comes to buying, and it's a lot more convenient when it comes to portfolio management. I can literally buy this gold ETF on Moomoo as well. And then the second part of my alternative investment portfolio, so my remaining 100 ringgit per month, will go to, I guess, you guys won't be surprised, but the answer is crypto. Before you guys roll your eyes thinking, why would I invest in crypto? It's underperforming like crazy, it sucks, everything else is just so much better. I'm not saying put your life savings here, right? I'm just saying put 10%, or I would put 10% of my investment allocation towards here, just as a small calculated bet. I know that over the last 2-3 months, maybe, Bitcoin has been performing really, really bad. It's down by, I think, 40-50% from its all-time highs just a few months ago. But we must remember that over the last 10 years, Bitcoin has been one of the best performing assets compared to almost anything else. It's also getting a lot more institutionalized, so some countries are buying it, some companies are buying it, and a lot of large financial institutions are starting to allow their clients to buy it as well. So yeah, it's getting a lot more mature, there is more regulation, and it feels a lot less like some small crazy bet that can earn us 1,000,000% or could make us go bankrupt. And I know, like I said, I know that crypto does seem like garbage right now. Bitcoin can't even go back above $70,000, but that's why this is just a small bet for us, right? If, let's say, Bitcoin performs like it has been over the last 10 years, then even though we have only such a small size, it will still give us meaningful returns. But our size is small enough where if, let's say, crypto totally blows out and Bitcoin goes to zero, at least it won't be that painful. And that is why I think 10% is just the right amount. Maybe 10% is too much for some people. You can even reduce this to 5% and reallocate the rest towards stocks or gold. It's up to you. So if you guys want to buy crypto, what would be your options? The number one platform, the most popular one in Malaysia, I think, is Luno. So this one is regulated by Securities Commission Malaysia. We can deposit and withdraw in Malaysian ringgit via our normal bank accounts. There's no problems with it, right? You can buy a few different coins, and I use Luno myself as well. Most of my crypto investments are in Luno. But there is, again, another option, might be a bit easier even, which is to buy Bitcoin via an ETF like IBIT, IBIT. I've seen crypto guys try to hate on TradFi, traditional finance, but the truth is, it is just so convenient, Traditional finance has almost everything. These days, you can invest into almost anything via an ETF, which is, it trades on the stock market. But still, you can buy ETFs for gold, silver, Bitcoin, like I say, even Solana, Ethereum, all of those things. So yeah, if you want to keep things simple, then my recommendation would be just to stick to a broker like Moomoo, and you can buy almost anything there. So the mindset when it comes to this particular investment is that we need to be ready to lose everything, or at least see huge whipsaws in price, right? Bitcoin can easily drop 50% and then from there drop another 50%. We've seen it happen before, and it looks like it is going to happen now. But especially if you're young, because with a long-term horizon, these things we can sort of ride it out, right? If over the long run, like I said, Bitcoin performs really well, it would still give us a meaningful contribution towards our overall portfolio performance. The worst case scenario is, yeah, we will contribute 100 ringgit per month, maybe over 5 years, that's 6,000 ringgit, and then Bitcoin really actually goes to zero. And at least, we only lose 6,000 ringgit. I know it is a lot of money, but personal opinion, this is a bet worth taking. Like I said, if you guys are not comfortable, you can completely remove crypto, or you can actually reduce the allocation. It's completely up to you. But from my experience, when it comes to Bitcoin, the approach should be just to DCA, just like everything else I would do here actually. Just consistently buy every single week, every single month, whatever it is. Don't try and time the market because it is incredibly hard. Now, finally, I have a quick note or a bonus investment, I guess, which is to voluntarily contribute towards EPF. I know a lot of people do this and a lot of people think that it's a good thing, right? And I know EPF, I would say it's actually really, really good. It's similar to ASB. Low volatility, low risk, and the returns are extremely good, right? 6% plus over the last few years. But the reason that I don't want to put my money into EPF voluntarily is that I don't want my money locked up into this thing until retirement age. This year I'm 30, I still have 25 years to go until I hit my retirement age where I can then withdraw everything for EPF. I just feel like it's not worth locking my money in for that long. Even though we get tax relief, which is a huge benefit, right? An additional 3,000 ringgit tax relief from voluntary contributions. Personally, I just don't think it's worth it. Again, this one you guys will have to decide for yourself. The older you are, the closer you are to retirement age, the more it makes sense. So yeah, just saying why I don't include this in my allocation, it's up to you. Again, if you're working a normal corporate job, you will actually have quite a big allocation going towards EPF already every single month. So to recap the full split for 1,000 ringgit to be invested per month as a Malaysian, what I would do is 200 ringgit per month going into my safe bucket. If you don't have an emergency fund yet, I would do that. If not, I would put it into ASB. Then 600 ringgit per month would go towards my long-term portfolio, of which 400 ringgit goes to global stocks, 200 ringgit goes to local stocks. And then the final 200 ringgit will be split equally between gold and crypto. That is exactly how I would invest 1,000 ringgit per month as of today. Like I said, this isn't set in stone. This is just what I would do based on my current scenario and my current financial goals. You guys will definitely be different from me, so you can always tweak this up, right? If you are a bigger risk taker than me, you believe in crypto even more than me, you can always up that allocation. If you're more conservative, you can even put more into ASB, more into bonds, right? All of these things you can play around with. This is just a concept that I'm sharing with you. Just remember that the best investing plan is the one that you can stick to. There's no point, saying that you're gonna go all into Bitcoin and you're gonna just trust it and YOLO. But when prices go bad, you cannot stick to the plan anymore. You think, should I continue investing? Should I sell everything and take a loss here? A lot of people DM me these things. You just need to make sure that your portfolio allocation is something that you're comfortable with regardless of what happens. So yeah, you need to really, really understand your risk tolerance before you make these decisions. So let me know down in the comments below, what do you think about my investment allocation and what would you do differently? Thanks for watching this video to the end, guys. Hope you guys enjoyed it. Give me a like if you did and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.